Somebody just reminded me of this the other day. One of my partners on that deal. Um, at one point, we were like, "We'll give you $100 just to open the software. Like, just
What
open
was
it
the
up
issue?
and run it through. Like, walk somebody through it. Like, and we could not get them to do it.
Live from the Denver studio here. We got Alex Tiller.
Hey, Raj, how are you?
That's that's awesome. So what's latest couple weeks? A lot of travel for you. It feels like conference season is in full swing.
A little bit of travel, a little bit of family time. Spring break, has just passed us up. So, yeah.
Where does a man who has lived with his family in Hawaii go for spring break? Because that's really tough to sort of beat.
My daughter had the fun of going to Universal Studios and Disneyland this
Look
year.
at that.
So that's
Fun for
um,
her, maybe not as much fun for the
not as
parents.
much. Yeah, exactly, exactly. But she likes it.
Well, that's awesome. That's awesome. And then what else has been keeping you busy for the last few weeks? Anything new? Anything shift recently?
I think you're right that we're kind of coming into conference season, and so fair amount of planning, getting ready for the year, starting to execute our year-end planning from the really just starting to implement those things. Carbonvert has been focused on, and really our approach to the market has been to go project by project and do project level financings. And so we've been out with kind of our two flagship projects, the Corpus Christi project with Repsol, Mitsui, and POSCO. We've been meeting with a lot of investors. There's been a lot of interest in that. And then simultaneously, we're also financing our what we call our on-stream project portfolio, which is in Louisiana. So that's our partnership with Castex. We have a large-scale storage project that's kind of the anchor asset in that portfolio that we're financing as well right now. So meeting with investors, lots of saying the same thing over and over and over and answering the same questions over and over and over. So
Maybe we answer
uh,
the top three questions you get on this podcast, and we just send it to them instead. Uh,
that
see if they
that
pass
would have
the
been way more efficient. That would have cut
exactly.
down my travel for sure.
Yeah, I figured as much. Okay, so let's do this. I feel like, Alex, you have a very fascinating background, and I don't like to flatter everyone. So I think it's just from everyone I visit with in energy, I'd say, like, and this is no slight to them, but the background is like, usually you do one thing and you do that very well for, let's say, 15, 20, 30 years.
Yeah.
You have a very interesting and diverse background relative to anybody else. So I'm going to take a stab at
Okay.
working through the timeline that has been disclosed publicly.
Okay.
Because I appreciate, as a serial entrepreneur, there's a bunch of things that are not listed. So I would
Right.
love for you to
Right.
fill in the blanks on some of the things that didn't work
Yeah,
out.
we
Because
don't we do we don't always talk about the ones that fail, right?
I think it would be better if we did, because I think it would be pretty fascinating. So I'll take a stab at this. You grew
Okay.
up, you grew up in Ohio, sort of small town, Corn Belt sort of area. You and your brother sort of leave as soon as you can. You go to the Northeast. You
Hmm.
go to school in Boston, and
That's
then you
right.
sort of get into the financial world, starting in Fidelity. And
Hmm.
then it seems like thereafter you had the urge to sort of go and start something new. And it felt like there was an inflection point around 3D animation, sort of at post .com, era, and
Hmm.
got into that, which seems like sort of a completely wild whirlwind from what we're probably going to talk about today. But that was sort of your first, what I see, public venture.
Hmm.
You then sort of go, and it looks like a wilderness period around trying to start something new in what is sort of where your homeland is, which is focusing on sort of the Corn Belt, seeing if there was an ag-related opportunity. It seemed like there was a bunch of subsidies at that time you were trying to take advantage of, and
Yep.
just while you were in that wilderness period, the market sort of went the other direction. Didn't really make a whole lot of sense. But while that was happening, it seemed like at least one of the investors stuck around and said, "Hey, why don't you go take a look at Hawaii?" And that
Yeah.
whatever that conversation was seemed to be perhaps the greatest conversation that ever happened because one, you got to move to Hawaii, and two, you took advantage of this phenomenal solar opportunity.
Yeah.
Where you started with sort of tax equity and solar financing, and then ultimately just acquired what appeared to be an EPC and development company. So you sort of wrap those two things together and look like, sort of hyper growth over 4 or 5 years, exited that business,
Yeah.
and then moved what I see back to Denver, I guess, and or to Denver, and
Hmm.
started spending time back again in the tax equity world,
Yeah.
and then it seems like there's a genesis story around Carbonvert, which has had a lot of milestones in a very short period of time,
Yeah.
and so now we're here today. I want you to fill in the gaps on what I
It's,
missed
I mean,
because
it's pretty close, right? But yeah, there was definitely some stuff in the middle there. I mean, that first move, all the way back to my Fidelity investment days. I was at Fidelity during the dot-com boom, and so
Mhm.
everybody was having lots of fun, doing startups and playing beer pong in their conference rooms, and all the silly things that came with that day and age. I
Which
happen to
still
be
happens today, by the way, Alex. Like if
totally,
you're gonna you go to any tech company today, even if it's a zombie code, they're still playing beer pong.
totally. I was in the product group at Fidelity. I was in the product management group, and so we were putting brokerage technology on the internet for the first time. So I had this. I could see all the entrepreneurial activity going on. I knew a little bit about technology. I could see a little bit about gaps and things like that. But way back when I was in like middle school and high school, I kind of liked art and wanted to be an artist. So I had
Wow.
this like creative side. And so I knew a fair amount of interesting artists that were all better than me, quite frankly. I had the creativity, but I just couldn't get it to come out of my fingertips. And so somebody started showing me, and it's an interesting period of time. If you look back on this, this is right around when microprocessing, a standalone desktop computer started to have enough power to do some interesting things, and the appropriate 3D software was starting to be developed and rolled out in a platform that wasn't, something that was only Pixar's, their own version of their own
Sure.
software that only they could use, right? There was stuff that you could buy. And so that first move was a little bit about being kind of entrepreneurial and opportunistic. I saw a new technology. I knew a bunch of artists that were dabbling in this space, but they didn't really know business. They didn't know
Hmm.
how to write a business plan. They didn't know how to raise money. They didn't know how any of that stuff
And
worked.
you were licking
And
your chops, saying,
and
let me fix that for you guys."
and then I got my creative fix out of being able to participate in the development of some of these 3D animations and renderings and virtual environments. I mean, we were doing virtual environment stuff way back then that is now still pretty revolutionary, right?
Hmm.
And so so I think, and that might be a little bit of a theme, and to the way I think about things. And also, it wasn't the same mission that I'm on right now, but I had a little bit of a mission to be involved in the arts, and I found a lot of motivation out of trying to help people that were very talented become something, express themselves, have a venue
Hmm.
to show their capabilities, and so that was my mission at the time. Um, did that for a number of years, and ultimately it was a lot of fun. I would call it a lifestyle business now at this point.
Yep.
I could not figure out how to scale it because ultimately we would buy $250,000 of servers, and about 2 months later, that would be basically
Obsolete.
worth zero, and then you could have just bought, a couple, a handful of new machines instead of an entire rack of machines, and I just like a bunch of money evaporated,
Right.
and then we needed more render power and more render power, and so we found ourselves in a interesting time, but again, fun work, learned a lot, but wasn't gonna turn into. We had no aspirations to be Pixar. I don't know how to write movies. I don't know how to do. You got to do music. You got to do story. You got to do all these other things. And really, we were just kind of in the visual communications business at that point. So ultimately, handed that business off to the employees. It was an exit. It was my first exit. It was nothing exciting.
What age were
But
you at this point?
26,
It's
something
pretty
like
good.
that.
It's
26,
pretty good.
27,
You got
something
the
like that.
first taste, first
Yeah,
first thing you did there.
yeah. Well, yeah. I'll have to go back and check the exact age on that. But then, yeah. So, kind of look to now. What do I know? What else can I do? And having grown up in Ohio, knew a little bit about agriculture. Grew up kind of out in the cornfields. Having worked at Fidelity in the product group, even though I was more on the technology product side. Literally, same floor, not too far away, the product guys that put together mutual funds and fixed income products and things like
Mhm.
that. So knew a little bit about how funds worked, knew a little bit about agriculture, and so and there was the renewable portfolio standard was out, and it was really kind of driving the ethanol business at the
Mhm.
time. And so I like thought farmland was a good investment. So worked on this farmland U.S. farmland private equity fund concept. Idea was, can I be a first time fund manager? Can I get some big investors? And had some interested parties, had a few commitments of capital, um, but ultimately just could not get that thing to go fast enough. And then we kind of banged into the downturn, Lehman Brothers
Yeah.
going, imploding and so forth, and just the market. It just killed. It basically killed all the momentum that we had. We were building into it, and we were going to go out and acquire a bunch of farmland and do different things with it to raise the value of the land, raise the income on the land. And one of the considerations was, what can we do with wind, primarily back
Mhm.
then, but potentially solar looked like a promising
Yep.
technology. And it was unclear to us whether that would work in different states and how that, how that was going to go. But spent enough time considering solar and thinking about it that I knew enough to be dangerous. And so when and that company was called Agrico, and so Agrico failed to launch. One of the early investors had grown up in Hawaii, and we were talking about what I was going to do next, and I brought up, this solar and wind stuff is pretty interesting, and I might kick around in that and try to find some opportunity. And this guy said, "Hey, man, you should look at Hawaii and then come back to me and tell me if there's something interesting there for you." So,
That's kind of
uh,
fascinating. Like
yeah.
you went back home, said, "Let me try to find something to do in Ohio." Didn't really pan out. He goes, "Hey, I grew up in Hawaii. Why don't you check
Well,
Hawaii out?" See if we can-"
I had moved artist rendering from Boston, where I started it,
Right.
to Denver. There was
Got it.
a lifestyle move there. I like to ski. There was a bunch of universities that were graduating animators that didn't, and then everybody
You're gonna
kind of had
find
to
more
move to California.
creatives in Denver too, right? Like
That's right.
you're gonna find some interesting guys that are gonna work on that side.
Yeah,
So
so I was able to staff. So anyway, so I was living in Denver at the
yeah,
time. Yeah,
in
then
hindsight,
started the farmland
do
fund.
you think the failure to launch might have been a good thing in hindsight? Because imagine if this is sort of, let's say it did pan out. Let's say you
Mhm.
end up being a GP, you raise some fund that has a 10-year fund life focused on ag
Yeah.
during that era. I'm not sure it would have been as profitable as going and chasing the venture you sort of did.
almost every bad thing. I would go so far as to say every negative event that I've had so far in my career that I thought was negative at the time has turned out to be okay, and maybe even a good thing. So,
Yeah,
yeah, I mean, a little bit of a blessing in disguise. It certainly didn't feel that way at the time. There was a
sure,
lot of frustration and had spent a lot of time and people's money,
of course.
getting set up and getting moving, and then to feel like you kind of get your legs taken out from under you from other events around the world. That doesn't feel good at the time, but it certainly played out pretty
Yeah,
well
it's
for
a
me.
yeah, it's tough, right? Like, market selection's interesting because I forget who I'm sort of copying this from, but like I did not come up with this. Is you can have 10 out of 10 execution on
Mhm.
what the market perceives as a 2 out of 10 opportunity,
Right.
and that is in some ways a waste of everybody's time, right?
Yep.
Which
Yep.
is, you're probably better suited to pick, let's say, an 8 out of 10 opportunity. And even if your execution isn't as great, you're still going to be better off and you're going to create a lot more value, which is kind of wild to think about. But
It's true. That's true.
so you
That's
end up
really
moving to
interesting.
Hawaii. Again, it looks like, I don't know if this is sort of intentional on your part. It looks like your sort of framework, let's say for lack of a better word, for some of these businesses is there is some inflection point in the market that leads you to say, hey, this is a growing trend. So, the animation one was around technology a little bit. The farmland was sort of related to sort of tax code and subsidy. Seems like the same thing sort of on your Hawaii thesis.
Yeah, I think you kind of have to look at these the broader market opportunities against what you know in life, and just constantly kind of be scanning the horizon for opportunity. That's you can't be so distracted by that you can't get anything done in between now and whatever in the future. But I would say that I tend to watch trends and
Yeah.
think about things and try to look for those opportunities. The back to the animation thing. So it was the right technology. I knew the right people, but it was also post 9/11. There was a real estate boom, and
Mm,
so a lot of what we were doing, the business niche that we found, the opening in the market was for all the real estate development that was going to happen, right? And so all these condo buildings were going up in Miami, and people developers were building new neighborhoods and housing, like, and so that it was the technology hitting the right point, plus the market was being driven to try to communicate. They wanted to sell stuff before it was built, right?
right.
And
Here's a way to
we
do
were
it.
able to deliver
Yeah.
that solution, and that gave these animators work that they could do, and
Right.
interesting work, and challenge themselves on that, and it could pay the bills. So, and then with this, with farmland, you're right. It was kind of RPS and so renewable portfolio standard was driving a number of things, and then certainly solar. The solar one is a little bit interesting, though. I mean, you got to call a spade a spade. Like, I got lucky with my timing on that.
Yeah.
I had no idea what was about to happen in the market. I knew that the fundamentals were right. Like, so Hawaii was and remains the best place in America to build a renewable energy project. They have the highest cost of power in the country. They have these relatively small grids, but they're very well known.
Hmm.
The islands aren't interconnected. They still burn a fair amount of oil, so their utility power was really subject to
Hmm.
global oil prices, and would move up and down, and but generally was very, very high. But when you went to actually pro forma a project and work on it, if you sold green electrons to somebody through a solar system, you could lock them in on a rate that was a same rate, a fixed price, because there's a fixed cost here, and you're not subject to global oil prices. And that rate, what was normal to them, was pretty high in the market,
Right.
and so you get rapid paybacks on these projects. rapid pay, cash on cash kind of returns. And you throw in things like depreciation and tax credits and all these other things. It really got interesting. The state
It
of
was a unique
Hawaii.
situation where you
Yeah,
take a commodity business or what you would perceive as a commodity business, but there's a
yeah,
lot more margin than ordinarily there would be given the timing, right? Like the alternative is way worse because of the volatility. You can lock in much higher margin than historically you could because they were dealing with such a bad alternative, and then lock in what seems to be federal plus state level sort of
that's
tax
right.
credits, and it's
That's
just
right.
like a gravy train, right? Like
There were so you look at it. There was a 30% federal tax credit. There was a 35 at the time. It's gone now. 35% state tax credit. 65% of the project cost is paid for by
just hit
somebody else,
immediately. Yeah, yeah.
right? And then the balance of that you're paying off against the normal cost of power within the state, which is already astronomically high relative to the rest of the country. It was really an exciting time, and it was a different. It was a you kind of had to approach things different. We didn't know that the price compression was going to happen within the
Hmm.
cost compression was going to happen within the market. And so, for those of your viewers that don't know, basically right about when I entered the time that I entered that business. So be thinking 2008, 2009 timeframe. The cost of solar manufacturing, buying the panels, buying all the balance of system, buying the inverters, all the stuff that goes into a solar system, basically went down like 80 or 90% over the
Wow.
next handful of years. They'll say a decade, but most of that happened in the first few years. So in
Wow.
and so that was an exciting trend to move into, but it also kind of
Yeah.
created its own technical problems because you would deploy 1 megawatt 1 month or whatever it is, and then the cost had come down so much that the next month you would have to deploy 2 megawatts to make the same margin because there were other competitors in the market and there were other
Yeah.
people going after it, riding that trend down. And so it was like you really had to feed the beast and increase your volumes to get your margin is your margin, but your fixed costs remain the same. And so it kind of diminished as the cost came down and
Sure.
as competition ate into that. So it was fun. It was hard, but we did some innovative things. We were one of the first groups that went out and really focused on financing renewable energy systems and targeting nonprofits. So the nonprofit organizations could not take advantage of the federal or the state tax credit. But these are the types of organizations that were interested in, one, fixing their costs,
Right.
and two, oftentimes, kind of the green side of things. So to be churches, it would be schools, it would be nonprofit. Think Red Cross of Hawaii.
Right.
Those types of groups were very interested in getting solar systems put in and limiting the just astronomical nosebleed
Right.
uh, cost of power that just was on a forever climb and has
Right.
continued to climb. And so we would go in and actually own the system for them. We would pay for it, and own and operate that, and just sell them the power, right? And
Right.
so
Yep.
and that's pretty normal today. You see
But it wasn't back
Sunrun,
then.
and
Yeah. Yeah.
you
Yeah.
see Sonova doing it on the residential side, and there's numerous groups now that have kind of picked up the lead on that and gone after that. But I do think we were probably one of the first to introduce that concept and to own those assets.
It seemed like you identified a niche, sort of similar to your 3D animation example, which is
Yeah,
here's a niche that like seems like a very niche market, but that's the perfect customer for us, right? So instead of chasing all sorts of opportunity set, it was, hey, we got this tax credit expertise. Most
yeah,
other people don't, right? So we'll just go to the person who is most desperate for assistance on that tax credit problem, which in this example is nonprofit, which makes them the best customer, right? Which is
yeah.
they don't normally have access to this. You're a provider who can solve that problem. Yeah, the 3D animation is probably a fascinating example, which is everyone else is creating art for art's sake. and you're like, hey, let's not approach it that way. You can create your art, but we're gonna have to do it for some business purpose.
Who needs it? Yeah.
Yeah, who needs it? Who is most desperate for my services is probably your
Yeah.
first layer of customers, and then you can sort of expand off of that. But
Yeah. Yeah.
without a customer, you sort of don't really have a business, right? So
Yeah, I mean the one, and I would tweak a little bit of the kind of the narrative that you gave on me joining the solar business in Hawaii. I came out with equity and tax equity to invest. Sonetric, which was the company's name, already existed. A guy named Sean Mullen had started the company and was already he was an electrician, bright guy, super smart guy, and had built a business, but really didn't. I think it was the scaling. How do you scale it? And so first we came with capital and we teamed up with those guys to help finance. He just wanted to build a project for you, right? He was like
the EPC,
selling,
right? He was
he was an EPC. He wanted to build a project for you, and then so our ability to come in and unlock deals like the nonprofits through having capital helped his business, and then ultimately him and I got along very well. He asked me to come in and help kind of take the business to the next level. And so I stepped in as CEO and I bought a piece of the company and so forth. So we were really doing it all. We were doing,
yeah.
we would sell it to you. We'd build it. We built for other developers. We built everything from utility scale projects all the way down to residential rooftop. And we did a lot of this CNI, commercial and industrial scale stuff, for whether it was, again, directly for that customer in the end. It could be a car dealership or something. They were properly capitalized. They could take advantage of it. Great. And if not, then, we would, it was an interesting value proposition because you'd say,
Right.
here's what it costs to do it. And if you don't want to pay for it, I'll pay for it. And
Right.
here's how much you would pay for the energy. Right. And we won all the way through that offering. Right.
Do you think you take that same analogy really from a CCS perspective as well? Do you think, now that you've looked at the entire value chain the way you did it, call it in this solar example, what are the elements that you think work well for, call it a smaller pure play developer here on the CCS side that makes sense? Obviously, a much bigger boy game, far more, larger CapEx, but what do you think's relevant? What do you think's not relevant?
I think that we need to get to a full service solution. Like if you don't want to pay for it, we'll pay for it and we'll just buy the carbon from you. Right.
Right.
And that has not been fully worked out yet.
Right.
There's a handful of deals in the market that may look like that. But there's not an established market norm around that, but it will go that way someday. The nuance here, or the tricky part, is that most of the large emitters don't want somebody coming in and monkeying around with the equipment on their systems, putting capture equipment in that may or may not, impact the performance of their multi-billion-dollar refinery,
Sure.
right? And so that is a little bit of a challenge in that. I think you need a little bit more. These are large, sophisticated organizations that are going to want to have a say over what technology and who's building it and how it operates and whatever. But ultimately, I don't think that they want to own it and own that equipment. And that sets up a scenario where somebody like a Carbonvert could come in and partner with an emitter and say, you've already spec'd this out. We're going to be your transportation and storage option.
Right.
We would also be happy to own your capture equipment. We'll take, or not, or you can own it.
Yeah, or you can finance it or something. Yeah, there's
right.
something.
But ultimately, we'll take the full stream of the tax credits and any carbon offsets if there's any of those, and we'll pay you instead of you having to go out and engineer it, operate it, transfer tax credits and carbon off, maximize that, and then just pay a fee to somebody to be in the disposal service.
Right.
You can do that, most of these organizations eventually get to a point. What we've found is in their learning, the arc of their learning about decarbonization. In the beginning, they always think they can do it all, and they'll even be looking at subsurface and drilling their own
Yep.
wells and thinking about subsurface. And eventually, that gets cut back. And then they start thinking about to get a pipeline to get this to somewhere. I don't really want to be in that. But the engineers will work the technical, and they can come up with the solution, and they always go, yeah,
Yep.
of course our tax department has got this. They're really focused on like how do we do it and the doing, but not like the whole wrap of like how do you actually
Right.
make the revenue model work, lay off the risk, separate yourself from the stuff that you don't like, you're not normally, this isn't their core business, right? And so after various amounts of time of people saying we've got this, well, whatever, the phone tends to ring, and they say, hey, you know what, we'd actually like you to
Right.
come in and take a look at what we're thinking, and maybe let us know, if you took this over, how we could simplify this, because
Right.
these investment committees, boards of directors, these are high capex projects, as you
Yep.
mentioned earlier. These are oftentimes for the large organization. Certainly, it starts with a B, right? Billion
Right.
dollar projects in many cases, and those folks, it's hard to get these to take the complex story of what really goes into a project into an investment committee or a board of directors to try to get approval, and they see all these weird things that have to be strung together that the company has no expertise or no history in doing. They tend to not like that, and
It's
and
too
and
much
not
mind
think it's
share
successful.
required, and the upside is minimal. But so on your point on the evolution, I think that's right. I have not met a group of engineers that ever leave the meeting saying we couldn't do that ourselves. So that is like just a universal. That's not a
Sure.
that's not a
Yeah.
bug. That's a feature of an engineering team, which is
Totally.
like we don't need these people. We could do it ourselves. The problem
Totally.
is that's not their incentives aren't aligned to that. Said another way, if they hire Carbonvert or someone like you,
Yeah.
and you don't perform over 2 years, you get fired.
Yeah.
If the engineering team doesn't make progress in 2 years, it doesn't really matter because that's not their core part of their business, right? They've got other stuff they've got to do.
It's a specialty project for them,
Correct.
right? Like this
Bingo.
is not what. Yeah. Yeah. That's
So,
right.
so the incentives are not aligned there in terms of employment around actually executing on what needs to be done, and so that generates a little bit of a problem. But
It
that's
starts with the question, though, right? Engineers love to start with the question, can we do it?
right.
And they don't always start with the question, should we do
Should we
it?
do it?
And
Right.
how
Exactly.
would we do it? And then if we should, how?
Yeah.
Like that's very different than can. Like we can prove lots of stuff on paper. I've made this mistake in the past. So you asked me to share some of the mistakes. I mean, so I sold Synetric in 2014,
Okay.
and we had a business inside it was an idea that I had come up with. We called it Autowatts, right? And the idea was I was trying to figure out how you could sell solar in the U.S. to homeowners, and make what was happening in Hawaii. How do we replicate that over to the mainland, right?
Yeah.
And the thing that the mainland U.S. they have different power sources for they have different feedstocks for for power, right? So you got coal, you got
Hmm.
natural gas, right? And they're not burning bunker fuel oil.
Right.
But everybody drives a car, and that's all on the same thing. And so these electric vehicles were just starting to come out, and so I kind of came up with this hypothesis that it, you want to be able to show a good financial projection, like a return on investment. And so if we can make people think about like the thing in common is oil, and if we can say, okay, let's sell a solar system with an electric vehicle, and let's package it like you're selling a car. Imagine if you went and bought a gasoline powered car at the dealership, and you could prepay 20 grand today
Of your gas. Yeah.
of your gas, and then you never have to pay for any more gas.
Right.
right? The rest of the life of the vehicle, right? Because it pays itself off and then it's gone, right?
Yeah.
And that also had that the economic fundamentals. Now you're fighting the cost of gas instead of the cost of grid power necessarily. Right. You'd size the system to the driving profile of the person. You could do it all in the finance office. This was the idea, right? You do it in the F&I office at the dealership. They love to sell extra stuff.
Yeah.
Why wouldn't they? Right. Right. And so that was the idea. And we started to build software to support that. We decided that there's no way that the technical piece of pricing a system, we basically had to build special software that would do it all, because you can't teach a car dealership people all this stuff, right? Yeah. But so we spent all this time building this software, because I was sold out, like, and that this was the right way to do it, and this was going to be huge. And you look at all the, how many electric cars are going to be made, and what's going to be the conversion rate on that, and so forth. And by the way, so I was doing this within Sonetric, and when I sold Sonetric, we peeled off. We said, you don't get auto watts, and so this was one of the first things that I started working on after selling Sonetric. And but the problem was we did the can you do it, because I was like, I don't know if we can build the software and make it so smooth and make it accurate and set up the distribution network that we're going to need to do. And so I spent a bunch of work on the time of, can you get the LiDAR data that you need so that you can read the homeowner's roof, and can we infer and can we, all these things, can you, instead of should you, and how would you do it? Right. And so built this slick software platform, went to roll it out. We rolled it out. We got a handful of dealerships in the Bay Area. That was where the highest penetration in the country for electric vehicle adoption was happening. And the whole thing imploded on itself, because what we found out was that the F&I, the F&I guy, the person in the finance and insurance office that closed, you've already said yes to the deal, and then you got to go in and do all that paperwork. Yeah. And then they sell you extended warranties and floor mats and all these other things. They didn't want to sell it, no matter what. They hated it.
Even with larger commissions, they just didn't want to sell it.
They did it. At one point, somebody just reminded me of this the other day. One of my partners on that deal. At one point, we were like, "We'll give you $100 just to open the software. Just open it up and run it through. Walk somebody through it. And we could not get them to do it. To save our.
What was the thought? It was too difficult to sell, or it was just gonna booger up the conversation? What was the thought there?
So here's what it was. One, they're very used to selling on a pattern. They start with the insurance and the warranty, and this fear mongering.
Here's your monthly,
and we'll just roll it in, and it's only $13 more. They know how to sell that all day long. They've been trained. And so they're going to go with what they know and what earns them the biggest commissions. And then it's this descending sales pattern, and anything new gets stuck at the end. And then there's buyer fatigue at the end.
Right. Yeah.
Right.
It's complex.
And so they just did not want to. And then, so that was one kind of finding. And then the other was that they were scared to look dumb. Right. They really didn't understand it. So even though we built this software that could do all the things and played a video, plays an info video, they don't have to say the sales pitch. We'll play the sales pitch for them. Then somebody be like, well, what happens if the power goes out in my neighborhood? And they're like, I don't know, right? And they didn't. They didn't want to lose their credibility.
Well, that's funny. I mean, again, it's maybe a 10 out of 10 execution on what was ultimately a 2 out of 10 opportunity there, right?
Well, and the timing was off. I still kind of, if you go to buy a Tesla today, they're selling solar panels in the Tesla dealership, right?
Yeah, roll it all into a monthly. Why not? Yeah, let's figure it out.
It's different. But we learn these lessons. And
being early is the same as being wrong, unfortunately, on these sorts of things.
I've been early. I've been too early a few times. That's hard.
So what was you mentioned sort of moving over and looking at this on the CCS side. Is there a romantic genesis story here, or was it, hey, like, let's take a look at this, maybe there's a business opportunity? What was sort of the origin story?
Of me getting into CCS.
Right.
Um, so okay, so sold Symetric, did Autowatts, that didn't work out. Kind of kicked around in the solar space a little bit, and there worked. Ultimately, ended up at this. There was a tax equity shop. They're a fund sponsor.
Hmm.
Um, Based out of San Francisco. And really, they had primarily been in the real estate tax equity business in the past. They'd done a little bit, some solar deals here and there,
Hmm.
but primarily they were doing like low income housing tax credits and a lot of historic preservation tax credits. So they were real estate folks.
Very lucrative business, by the way.
Very lucrative. I mean, great business and good brand, good
Yeah.
reputation in the business. But they had decided that they wanted to really build out an energy practice,
Got it.
and so we got connected up. And I said, I know a little bit about funds, and I know a little bit about tax equity, and I know a little bit about standing up a business. Um, and I know a little bit about talking to investors, and so ultimately stepped in to that organization to build their renewable energy practice tax credit business. And so was doing that, and that was kind of its own cycle of, first it was just me, and you build the investment
Hmm.
thesis and put together fund docs, and kind of like build a marketing plan, and then you start to market this thing and start to try to raise money. Marketing is raising money.
Yep.
In the beginning, you got to raise money before you can go, invest in projects. And so built the sales funnel there. Started to raise some money. Started to raise. Then you need the ability to deploy it. So started to hire some team. Anyway, so was doing that, and that was for several years, and that was great. It's a good business. It's a lucrative business. It's a needed business. But it wasn't particularly innovative,
Hmm.
if you ask me. And so, but that's okay. Everything you do can't, be crazy and novel, and first time risk on everything, right? So
Sure.
it was a good business to be in, but I was doing that, and in February of 2018, the 45Q tax credit revision came out,
Hmm.
and to be honest, I had never seen 45Q before. It was shocking to me that
Yeah.
that even existed previously. I didn't really know what carbon capture and storage was. I was very much electron focused, and maybe some tax credits for some biodigesters, but for the most part, it was like solar,
Yep.
almost all solar, a little bit of wind, a little bit of fuel cell here and there. Um, and so this tax credit was interesting to me, and it was interesting to one of our institutional investors that we talked with and spent time with a lot. And so started digging in on it, and really spent a couple of years going to conferences, trying to house the technology. Were really technical conferences.
Right.
And what was really interesting was there was all these people that knew how to do it, but they did there was no finance guys in the room. It was all
Yep.
geologists. It was
And that
all
came
the
from the
dis
legacy
the
of EOR, right? Like it was really,
yeah, yeah.
just decades
or
of these
or
older
or it was
assets.
these academic people,
Yeah.
or DOE funded academic people, right? So maybe
Yeah.
not universities, but DOE had been pouring
A lot of cash.
billions of dollars into getting, and there were these carbon safe programs, and you're like, oh, there's this whole world, it's not that big, but there's a universe of people that actually know how to do this. But there was still just no deal guys in the room,
Yeah.
and that was weird. So it was like,
You've
okay,
seen this
well,
story before.
yeah, yeah. And it's like, everybody's saying this stuff's really expensive. Like everybody told me when I went and got into solar, they were like, that's never going to work. And it's like, well, maybe it works somewhere. Like
Yeah.
maybe
Yeah.
not everywhere, but maybe somewhere, right?
Right.
And maybe if these things happen, maybe that changes over time,
Right.
right? And
Yep.
so so that was exciting, and it seemed like I was still wearing my uh, tax equity fund manager hat, and I was looking for projects to invest tax equity, any like where's
Yep.
the deals?
Right.
And there were just no deals. And I spent 2 years. And so ultimately, kind of in the end, it was like somebody needs to go put together some projects
Right.
because, and it was only $50 a ton at the time for sequestration, but there were places where that worked. And
Hmm.
you're like, it's not everywhere. You have to look for it. But under certain circumstances, that worked. And so it seemed to me, and everybody was really interested in ethanol because the people that were thinking about projects and where projects might happen. And a lot of that was the people that wanted to do the technical work to to put together the project. Um, they wanted ethanol. They were smart enough about how things work that they were focused on the ethanol market because it's low capture, almost zero capture cost,
Low cost of
really
change.
really
Yeah.
low.
Yeah.
Um, but that in itself, like everybody was kind of all spun up about ethanol, and it was like, well, I mean, that's interesting, but these, having grown up in the Midwest and grown up in the cornfields,
Yep.
like these things are not close to each other,
Yeah, they're
right?
far
And
apart.
these, and then we were kind of, it was COVID time, right? And
Right.
so, and then it was like, some of these plants are shutting down. Like this is not the place to
Yeah.
do it,
Yeah, ethanol
right?
is a 1x business in the sense of like you're lucky to get your money back, right?
Right,
It's not a high
right.
returning business.
Yeah, I mean, so and yeah, granted, you could sell it for more into California. Like there was a reason why
Everyone was the
people were
low
focused.
carbon fuel standard at that
It
time.
wasn't. It
Ethanol
wasn't
ripped
like
through everything.
it was dumb people. It was just that everybody kind of glommed onto one thing, and we.
Right.
So anyway, so ultimately, it's like, all right, somebody needs to start something, and then the question was, I almost felt compelled. I was a little bit beat up. There had been another startup, which I don't even feel like going into, but there had been another startup on the side where I was just a board member, but that had been a catastrophe, and so I had kind of sworn off startups for a little bit. But then I saw this like need. There was a gap. I felt like I understood the technology some. I felt like I understood the financials, like the revenue model really well. I felt like I had been talking to investors. I felt like there was appetite in the market.
Hmm.
I put together a development, like at Sonetric, we had a development company. We were developing our own stuff. So I felt like I knew a lot of the pieces, but I didn't actually know how to, like, wiring together some solar panels is stupid simple,
Very
and
different. Yeah.
any dum dum can do that. And this was actually really technical. So it was like, okay, I don't want to do another startup, but I feel almost compelled that something needs to be done here to start this market. Um, and I guess I kind of got to do that. And then the question was like, can I find somebody to start with that actually knows how to do these projects,
Right.
that isn't just like, I'm a little bit, I'll self admit I'm a little bit of the hand waver, right? Like I can
Sure.
explain stuff, but like the sitting down and actually engineering it and saying this is how it's going to come together and this is what it's going to cost and this is the time it's going to take and here's the risk associated with that. um, that's not me, right? That's not what my profession is, or what kind of the what I am in business. That's not my role. And so I was super lucky to find this woman, Jan Sherman, that had just retired from Shell, and she was general manager of carbon capture for Shell.
How did that
Uh,
intro happen between you and Jan, right? Because it sounds like obviously your new foray into this, right? Pre 2018, conceptually, the concept of carbon capture or anything that's associated with oil and gas, like that wasn't really in your purview. How'd you end up getting connected?
yeah. So uh, So I, even though I was a renewable energy guy, the one thing I can say, my brother was a hedge fund guy that traded energy stocks his whole life,
Got it.
and
Okay.
so so I knew some energy people, and he knew some energy people, and so there was a little bit of a network, a conventional energy, I should say, and so two things happened. One, I hope he's okay with me using his name, but this guy James Mackey and I had worked on some stuff in my previous renewable energy days. He had been with NextEra and with Apex Wind, and so I knew James Mackey, and James Mackey had just left to go to OGCI
Mm-hmm.
and started as their managing. Like literally, he puts it up on LinkedIn that he's like, "I'm happy to announce I'm starting as managing director at OGCI," and I was like, "Mackey." So I like pinged him right away and texted him. I forget how it was like. I was like, "You're getting into CCS? I just started a CCS company. Like I'm out on my own." Like, and he's like, "That's
What are the
fantastic." So
odds?
we get on the phone and he's like, "What do you need? Like, how can I help?" And I was like, I don't actually know how to do this. So, like, do you have any ideas? Like, who and so Jan had been OGCI's or Shell's OGCI
I see.
representative.
Okay. Okay. So they
So, like,
know you.
within the hallowed halls of OGCI, the Oil and Gas Climate Initiative,
Right.
the Jan was the Shell representative, and anybody that's ever worked with her, they know that she gets shit done, right?
Yeah.
And she's the real deal. And so very good reputation. So he's telling me, he mentions her name. I look her up on LinkedIn, and I'm like, what? I can't believe this woman's a free agent. So
Perfect.
I was like, you got to introduce me. And he's like, I just started here, man. I don't really know her. I just hear, good stuff about her, right? So he's like, you got to go figure that out on your own.
You're like,
So I'm like
let me get you
LinkedIn
excited,
messaging
but I
her.
can't help you at all.
I'm LinkedIn messaging her and she's not answering. And
Oh,
so
shit.
then I get my brother on the phone and I was like, look at this woman's resume. Like, this is like, like really impressive. And I'm like, I can't get her to answer, answer my messages. And he's like, well, he was looking at it on LinkedIn too. And he's like, she's connected to David Heikkinen. And
Ah,
so and he's like, I know David Heikkinen. I've, played poker at his house or whatever. I forget
yeah.
what the example was. He's like, I've known Hike for years. And so my brother Nick reaches out to Hike and says, tell this woman, Jan Sherman, to call my brother Alex. And Hike thankfully does. And Hike's like, sends her a message that's like, Nick Tiller's a pretty good guy, but I don't know anything about his brother. So, be careful. Right? So, anyways,
Uh,
small
that's
world,
pretty, pretty good.
and that was right about the time that she had been retired for just enough time that I think she was starting to annoy
Yeah.
her husband and
Yeah. Yeah.
rearranging the closet a few
Right.
times over. So lucky timing.
So that's awesome. So you guys get started,
Hmm.
and almost off the back, the focus is let's respond to the RFP, uh, focused on what ended up being ultimately Bayou Bend.
So yeah, so there was a couple of things. So one, when she was skeptical, and she's like, really? People are going to do startups in this space? And I was like, I don't know, but I am, right? Like,
Uh,
and she's like, and she's
I'm
like,
working on this no matter what. If
she,
you want to join
yeah,
on, you can.
I had left my last shop. Like I was like, I'm
You
going
were
to go
all in.
do this. I regretfully am going to go do this. And it's probably going to be a donut was what I was thinking. Right. Like and then she's like, well, what's the process to interview and stuff. And I'm like, this is it. Like, it's me and you. And she's like, what projects are we going to work on? And I was like, I've got some project concepts that I've put together. I had like a slide deck and whatever. And she's like, all right, well, send them over. She's like, I know what good CCS projects are. And if they're any good, I'll call you back. And if not, you know, then,
I'll
it'll be
probably
nice
not.
meeting you.
Yeah.
Right. Exactly. Exactly. And that was a heart stopping, like pushing the button to send that because I was
Yeah.
kind of like, I did believe that she knew what good stuff was, and that would also suck if she came back and she's like, this is all dog crap,
You're
right?
like,
Like
I
this
got to
is
find some new projects.
right. That's right. So the Texas RFP was one of the concepts in there, right? And so actually Louisiana, which is like a couple of our those two projects were in that initial
Wow.
kind of concept deck, and that was because brilliant people in Texas Tip Meckel had been out talking about
Yep.
offshore for
Yep.
so long and going to these conferences, and there had been so much data collected on this that it was just that it was that information asymmetry to a certain extent, like just awareness, being out looking at the time, feeling confident in that I can make the revenue model piece of this work. I know how that works. Um, but going after and then Jan's resume was perfect for this, right? Jan built, or I'm sure I'm saying it wrong, and some oil and gas person's going to nail me on it, but um, she led the like front end, like the design and engineering of
Right.
Perdido, which is a very famous offshore project for Shell in like 10,000 feet of water, right?
Yeah.
And so this woman had CCS experience and offshore
Yeah.
development expertise. And so, when we started looking at that, and we are like, here's all the work that the state's done, and the DOE's paid for, the state's paid for, this and that, and we were just like, why not put in an offer? And so then let's see, let's respond. There's going to be an RFP. The state had been
Yeah.
saying, we didn't know when it was going to be, and so then we were like, okay, what would it take to win? And how would we go? How would we approach this? And so one of the other really kind of interesting things, this was one of Jan's ideas, which I thought was brilliant, was she went out and found all the RFPs that she could find that had anything to do with CO2, with carbon.
Right.
Um, and she basically merged it all into a single doc, and then just started pretending like that was the RFP. Like, we didn't know what was going to be in the RFP, but to draw on other RFPs in other areas,
Sure.
and to try to frame that towards this area that was like, we didn't know how big, what day, this, that, what have you, how the RFP was going to come out, but we could start to respond to it and start to be thinking about the project. And one of the things that, there was a section on operations, and we're like, ah, crap, how are we going to do this?
Two-man band's gonna look pretty weak.
This is going to look weak. This is not going to fly. So
This is
then
not an RFP winner.
so then we decided that we needed we were going to need to partner with somebody on that. And at the same time, so Jan's kind of working on this
Right.
faux RFP to try to get us ahead of the game. I was also taking her out. We're meeting with investors. We were trying to figure out how we were going to capitalize the business. Were we going to do? Was it going to look like a venture deal? Is it going to be a PE backed? Like let's go out and talk to the market. Let's just do a bunch of meetings.
Right.
And so we were meeting with this one investor, and the investors like, you guys are kind of interesting. This is kind of cool. Like, what do you need? Like, what, like, other than money, what do you need? And we were like, we need an operator. Like, we had like, we were ready to go. And again, lucky timing, like, stars align. The guy sitting across the table from us was like, I'm on the board of directors at Talos Energy. And they would be interested in hearing this, because they're thinking about carbon as well.
Right.
And so he very quickly was able to set up a senior, us right into the C-suite. We did a phone call with Tim Duncan and a handful of other people. Bob was on that call, and a handful of other people. And then they were like, you guys should come in and, like, let's meet. And so I flew down. This was still COVID, so I think that was my first trip after COVID started to kind of reopen up, and flew down. Jan and I had never met in person.
Wow.
We'd only been on Zoom.
By the way, that would only happen during COVID time, right? Like, where you can start a business with someone who lives, in another part of the country. You've never met them in person, and by the time you meet, like, oh my God, we've talked for hundreds of hours. This is crazy.
Yeah. That's exactly right. So anyway, we met with the Talos folks, and we pretty quickly put together an agreement to go after that project 50-50. And it was, Talos has since built out a low carbon team, and they're super fantastic people with great capabilities. But at the time, they didn't know anything about tax credits. They didn't know anything about carbon offsets, and nobody in shop had touched CO2 like Jan had. So it was a very complimentary, and it was good enough that we won, and we put together a pretty compelling RFP response. Eventually, the RFP came out. We had it halfway filled out. Like once we signed up the joint bidding, we basically started working on it. And again, lucky timing or appropriate timing that we had done all these other things that led up to it, because within a matter, like it was like a week or two later, then GLO like announces that RFP, and we already had our team set up and ready to go, and it had a really short fuse. It had like a 4-week response window,
which was perfect for you guys,
and
right? Like not good for anybody else, but for your purposes, you guys.
We thought it was really written for somebody else, for a super major that had the ins, and they already knew who they wanted, and so thus it was such a compressed window, so that only so and like it was asking for ridiculous things. It was asking for give 3 examples of they wanted to do a reference check on 3 other carbon projects that you've been involved in, right? And like
So
there's not very many.
Yeah,
there's almost nobody that could do that, right? But we had, so one of the things that we had done was, one of my a guy that I went to business school with is a former BP executive, with this guy Wissam, so he joined my board right away, joined the board of directors right away, and so we had put together the right team. Wissam had run North Africa for BP, and there's this famous project there called In Salah that's in Algeria, and so that was one of our, and they called Algeria, like the state of Texas called Algeria to confirm that Wissam was involved in the company and was involved in that project. Jan had done the Quest project for Shell in Alberta, Canada, and then we had another a guy named David Greason that had done the Petronova project. He was just like an advisor for us. But you got
your 3 reference checks, right?
We got our 3, but see, and Talos wouldn't have had anybody, right? So so this little company that was just a couple of people and some advisors and board folk, like we were able to kind of cobble it together, and that's we've kind of continued with that, bringing these really kind of unique experts together that are things that we think are real friction points in putting a CCS project together.
That 4-week time fuse, 1 is sort of nuts, but 2, I don't think any other large company would have been able to mobilize. Like, sure, the resources exist. I just don't think anyone else would have had sort of the willingness to pull something together in 4 weeks, even if they have all the people on the team.
There were 12 total responses, okay, and there were some big companies in there, but I don't know what they submitted. Like, I think it might have been they might have pulled together the team and thrown something over the wall, but
they might have been like, oh, I think this is this is like sort of our indication of interest, and then we're gonna really fully fill this out over time, right?
But by bringing in Talos had 3D seismic for the entire area, and I don't know that these some of these other groups that were like an LNG company that's onshore that has they just didn't have the things that we had and the capabilities that we had and the experience that we had. So anyways, it was a seminal moment for Carbonvert, and we've been off to the races ever since and doing similar stuff.
Well, one, that's obviously an awesome Genesis story, and then that project coming together, which has now sort of changed hands a couple times. Before we get into that, you sort of mentioned talking to a lot of investors. You're trying to figure out, should this be sort of a venture-backed business? Should this be a private equity portco type business?
Yep.
When you guys came out, I think it was relatively novel, and I suspect a lot of private equity funds, I know this firsthand. I have a belief that I think these businesses are so capital intensive, they probably ought to be out the gate a private equity backed, control equity backed sort of entity. No different than the way oil and gas venture worked for a very long time.
Yep.
You guys have a very unique situation, and perhaps a partial monetization leading to a full monetization of Bayou Bend has allowed you the opportunity to stay venture back. But how do you think about that?
I, that was the debate, and it continues to be. What's the right model for the market? We raised a venture style round first. Um, I mentioned my brother was a hedge fund guy, so energy trader.
Mhm.
Uh, we have pretty sophisticated friends and family, I guess I would say.
Yep.
And so we were able to pull together a venture style seed round. We used a safe note to do it,
Yep.
which is me pulling on some of this dopey stuff I was doing out in Silicon Valley with like autowatts, right? So I kind of came from it with a little bit of a wider aperture.
Sure.
And I don't know that I appreciated certainly the large projects that we were able to win out of the gate. I knew these were high capex, but like
Oh, it's nuts.
it, I don't think I fully appreciated how capital intensive it was going to
Sure.
be. But then I also was like, well, I know how project finance works, right? I mean,
Right.
tax equity is a slice of the project finance capital stack, and I know how all of the project finance has happened in renewable energy. And when solar started, there were no PE shops, right? And there were no consolidators, and you really didn't know what your exit was going to be. You're kind of like, oh, shit, I'm going to own this thing, I
Sure.
guess, for 20 years and collect revenue, right? Like,
Right.
so I had seen different things. I don't think I was overly influenced that it had to be private equity. I just kind of figured that we would figure it out and get it done as we
Right.
went. We have been very fortunate. I know that private equity serves a very important role, and I am not at all saying down on private equity. I think private equity um, is a very efficient way, but I think it also needs a certain level of maturity in the market that I still don't know if we're exactly there yet with this business, because these projects take so long, and because
Yeah.
there's so much uncertainty around when you're going to get your class 6 permit and things like that. And that does not match well for private equity.
No, it
These are
doesn't.
not cash flow ready. And so it's a tweener. It's hard to say what is the right way. We've been fortunate. We got numerous offers to be private equity backed. I also kind of like, it's just a personal belief that as soon as you sign up with a private equity shop, you've just sold your business, right? They're
It's
in
a one-way
charge.
call option on your business, right? Because it's you don't have control, and look, and they're aware of it too, right? Like that is
Yeah.
that is the
Yeah.
price you pay to get access to hundreds of millions of dollars without having to go,
But I but
raise at the
but you
time, right?
don't need $100 million on day one,
No,
right? You
right,
need it in these projects. You need it. You're going to need it later.
right,
You will need it, and it's going to suck, right? But but you can do a lot with a little in the beginning, or
right.
at least for the first few. Uh,
Origination
they've
and land grab, right, is not the vast majority of the capex for these projects.
Right, right. And so we were able to, yeah. So we did not feel like selling our business. We felt like it was a mega trend that we were walking into. We thought we had unique capabilities and vision. We thought that we probably understood this better than any private equity shop out there, because they really didn't get it yet.
Yeah,
Um, and they were, and the ones that did get it are just like, this J curve sucks, right? Like that was all like, I can't tell you how many of those conversations we had, and we're like, look, if you want to be in the space, like this is how to do it. There's nothing done and dusted with a bow on it, with all the off
no, no, no,
take
no.
contracts ready to go, and there won't be for years. So our
It's
willingness,
tough. Yeah, it's
yeah,
tough.
and again, we were also in this unique situation where I'd had a pretty good career. I'd had my
Yep.
exit. Jan had
Oh, you have a
retired.
unicorn
She had
team,
had a
right? So you
she
have
had had
an
a good
opportunity.
career. We were we raised money from people that we knew that trusted us, and so and with that we were able to hire up some other people and do some stuff, and sign our first lease bonus, and so um Yeah, it's been a fortunate way that it's worked out for us, that doesn't mean that if somebody goes out and takes private equity to start a CCS shop, that that's necessarily bad. We've just been very fortunate that we've been
Yeah.
able to
I mean,
have
I
those
think yeah.
monetization early monetization events as well,
I
and
think
now we
you and
kind of control our destiny.
like I think there's a little bit you're being a little bit humble, right? Which is I think 95% of teams, maybe even higher, that want to go chase this sort of business plan are going to be forced to raise control equity. They don't have the luxury of going out and being able to do it the way you and Jan have, and I think that comes from sort of a phenomenal track record historically, right? Perhaps
Yeah,
not in this exact business, but in sort of a prior life.
yep,
And I'm not,
yep.
yeah,
I
no other
appreciate
team's
that.
going to come out of the gate that way. So it's interesting,
There's
and
yeah, there's smart teams out there. Some of them are just. I think Jan and I have a pretty high risk tolerance too, of just like,
right.
I don't know. Let's go take a run at this, and we'll just start writing some checks off of our checkbooks and see what happens.
Well, so if you think about the origination and the land grab in the Gulf Coast, which is where you guys have really spent all of your time, to my knowledge, what inning do you think we're in of that from a call it small companies being involved? Because we've already seen like Bayou Bend is a great sort of example to walk through the timeline of. That project is no longer in the hands of anyone small or independent. Talos recently exited. You guys exited last year. Now we have Chevron, Equinor, and Total,
Yeah.
all measures that we'll see what the timeline looks like relative to the speed that you and Talos were moving at. How do you think about the rest of the Gulf Coast? Are we in the late stages here, or are we still in the early stages?
In the offshore, I would say uh, I guess the question is, let me clarify. Are we talking about the pore space acquisition game, or of the total CCS? Because I mean,
Yeah,
almost nothing is on stream right now, right?
that's
Like
right.
almost nothing is getting captured and going down hole. Like we're still early in the CCS business for the Gulf Coast is extremely early. First inning for sure, right?
I think
Uh,
about it as two different land grabs because I get this question a lot, which is like, how do you think about the CCS land grab? And I'm like, you're thinking about it as an oil and gas person, which is we're going to go get a bunch of acreage and then we're going to drill wells on it, which is not, this is more of a waste management business. So it's a little bit different.
yeah,
So the pore space is the pore space.
yep,
And that's a land grab happening on pore space. The other land grab that you and I know quite well is how do we sign up emissions, right? How
yeah,
do we
yeah,
sign up, whether you want to call them emitters, you want to call them customers, these are people who want to dispose of their carbon. They have some
yeah,
need to. Perhaps they don't have too much of a need to, and they've got to dedicate it to somebody. And I think that's, in fact, in my opinion, maybe even a more valuable land grab, right? Which is how do you get those contracts in some form or fashion? How do you get the dedication or the
yeah.
rights? And I
And
give
you
you a
can't get that until you get the land first, though. Like you got to be able to
chicken and
point
the
to
egg
where.
problem, right?
Yeah, you got to be able to point to where you're going to put it, right?
Right.
Just knocking on the door and saying, "Hey, we're gonna." That will come. There will be a mature. The industry will mature over time, and at some point, there's going to be enough storage solutions and enough pipelines and so forth that somebody could come and just kind of come in and say, "Hey, we're going to help you with capture, and we'll figure it out. We'll use one of the various alternatives."
Right.
But it's really so where you're going with your thinking is right, and the answer across the board there is that it's still super early innings. The only thing that is fairly mature is this pore space acquisition that has occurred and is occurring, and it will continue to occur. People will continue to lease up pore space,
Hmm.
but a lot of the really good acreage has been leased, in my opinion. And so I do think that and really big, we think that it's not just about the quality. Oil and gas people talk about the quality of the rock.
Right.
It's not just the quality of the pore space. It's the size, the mass, and scale, and then also proximity to emissions.
Yeah.
And so the early adopters have gone very quickly to pore space near the emissions, and anything that's not leased up, somebody will lease it up. prices have been moving up significantly over the past couple of years. That's pretty well chewed up at this point. But that's not the end of the game, right? The
Sure.
game is putting together the whole project and getting these customer commitments and building the pipe to connect the various customers and figuring out how to do that. It's not really last mile in this business. It's that, last 20 miles, last 50 miles. How do you get that to your site?
Yep.
That there's a lot of wood to be chopped in those categories still.
So it's an interesting thought experiment, right? Because if the tier one, let's call it offshore projects, are sort of chewed, sort of taken down in the Gulf Coast, you're now seeing these projects. You've seen them personally change hands, right? You and Talos moving them.
Yep.
You guys moved incredibly quickly, in my opinion. Like, right, 4 years ago, there was no real Carbonvert, right? And you sort of have gone through the entire life cycle, at least of the beginning phases of those projects. Now that they're owned by, various strategics, do you think that timeline is, Carbonvert and Talos in this example don't have the luxury of time. You guys have to move very quickly. In some ways, these larger operators have the luxury of time. Do you think we're going to see this next phase be a much longer slowdown the same way that we saw, let's say, in the early days of this industry because it was owned by the larger strategics?
I think it depends on the group and who's the operator and what they're really trying to get accomplished. I think Exxon took down significant acreage in the last lease round. BP took down acreage, and then we took down acreage with our partnership with Repsol as the operator. And so we were the three big winners in the last RFP process, and that is the highest quality offshore acreage in the United States, bar none. Like the good stuff is definitely controlled now, and closest to the emissions. There's plenty of good stuff onshore as well. Again, it doesn't all have to be offshore. We focused on that because we like the scale, and scale matters.
There are going to be much larger projects, at least on the disposal side, offshore.
That's right. That's right. I think that this part of the value proposition of having Carbonvert involved in a deal is that we're all about trying to keep the project moving fast, keep that urgency. And I think people like to partner with us. And, we heard from some of our previous partners that, sorry to see you go because, they valued that we, one, had experience and knew what we were talking about, and were added value to the partnership. And we were always cost conscious and velocity centric, right? So, I don't know what other people will do, but I'll tell you that, when we're involved in a project, that's what we'll be, that's what we'll bring to that project.
Right. So we're now in an interesting era, let's say today versus like a couple of years ago, at least on, we talk a lot about the pore space side and putting together these projects from the beginning from a storage perspective. Transport's interesting now, right? Because, we had a series of very well-funded guys attempting to do, let's call it Midwest transport, which I suspect you spent a lot of time looking at. And now we're really left with, call it one man standing, which some ways is good. And in a lot of ways is, it's not fun to have any early stage startup that's taken a lot of risk not really pan out for the industry as a whole, right? It's going to slow things down. Mm-hmm. What's your take looking forward on the transport side of things, at least onshore?
It's interesting. I think that there's this old saying that if you're a hammer, all you see are nails, right?
Yeah.
And I think pipeline people want to build pipes, and that might not always be the right solution,
right?
Right? Or
right.
So we do need to build pipe. It is the lowest cost, highest efficiency, safest. It is. All these things are true. But I think it's a daunting task to build a mega architecture, And when you looked at the capital efficiency, like the utilization of capital on those projects, um, it, it's a head scratcher for me. I all those places need to be decarbonized,
Yep.
um, but I don't know that one big massive architecture from the beginning is the way to do it. I think you might need to do clusters, and I get that that's not as fun or sexy or great to raise capital around story,
Yeah.
but there's a practicality. Um, Not all the ethanol sits on, and not all the in industry in Middle America sits on good pore space. But you should also probably go to where the good emissions sit on pore space first.
Right.
And so if somebody else wants to go work on that and crack that nut, like I'm all for it. Go for it. I do not like to see projects fail. We know the group that was working on that, and they're all great people and very smart, and um, wish them the best, and hope they come back out and do another CCS project, because lots of carbon needs to be captured,
Right.
moved, and stuck in the ground. Um, but I just feel like some people are going to do what they know, and that's why we did offshore, and everybody
Right.
else thought we were completely insane.
That's right.
I had, yeah, it's one of our competitors, but it's not really. We don't step on each other's toes too much, but they're just like, never do, like, why would you ever do something in the offshore that could be done in the
Right.
onshore? And we just, like, I get that makes sense. I get that as a philosophical approach that the oil and gas business has taken in the past, and there's a lot of truth to that. But the other, they just didn't see the other good reasons, and that when you apply a factor, a scale factor to this, the things that they're concerned about go away, right?
Right.
And now you're just stuck with something that's actually very much on in parity to what you can achieve onshore in total cost, and and from a stored CO2 standpoint, um, but it's at a mega scale compared to what you can do in the onshore without
Right.
signing up 5,000 leases with 5,000
That's right.
different people, right?
And ultimately, if you believe it's a big boy game, you sort of have to think like, what does the big boy want? Does the big
Hmm.
boy want a couple of these onshore projects?
Yeah,
History would tell you no, that's not really what they
yeah,
want. They
yeah.
want a
And
place that they could park billions of dollars, and that's very hard to do logistically if you're looking onshore, right?
and it's like, do I really want to have 5,000 lease owners or 1,000 lease owners that are some of
Right.
them are sophisticated and some of them are not? I mean, that's, I go back to my solar stuff.
Yep.
Like, we used to do residential rooftop all the way up to, CNI and utility scale, but like, there's a school of thought, like, I don't want to be fighting with some lady about how this looks on her roof, and
Yeah.
whether my truck backed over her petunias, right?
Yeah.
Just, and so you get different, yeah, selecting where you go and where you spend your time and money is important.
Yeah.
We like where we've gone so far. It doesn't mean we won't do onshore, by the way. We will do onshore, uh, but
Do you think there's going to be enough? Like, as you guys have looked at like pore space, obviously we have the Midwest projects that are going on, and then we have some, call it gas treating related projects that are going on in Louisiana, and a couple things going on in Wyoming. What do you think about Appalachia and Rockies that have been discussed for a while? Like, do you think there's quality enough pore space that's adjacent to some of those emissions to work, or do you think we're that's, call it another phase that we're not in yet?
Uh, there is quality pore space that can work. Certainly in Colorado, in the Rockies. I'm in Colorado. We don't have a project in Colorado. We'd love to. And there's really interesting legislation being proposed here. Wyoming, we're kicking around in Wyoming. We're doing some stuff up there right now. And so, look, I think it can and should be done. Appalachia has challenges and has, it's not a slam dunk. It's not easy, but you
Yeah.
can do some of these smaller projects in Appalachia, and so I don't know that that's where we we've looked at some opportunities, and it's never a hard no. But I haven't. We're not at the phase right now where we need to be cobbling together a lot of smaller projects. We'll get there
Yeah.
because the big ones will get done, right? The big ones will get locked up, and the emissions will be committed, the pore space will be committed, and then you got to move on, right? And you got to go solve more problems elsewhere, and it'll get harder and harder and harder, quite frankly.
Right.
And that's where you hope that the costs come down, permitting smooths out, timelines, things like that come in to offset some of those challenges. So I think all of it should be done. It should be
Yep.
done in the Rockies. It should be done in Appalachia. The question is today the day that you do it?
Right.
And you go back to solar. I went to Hawaii first to do it. Hawaii and California were the markets, and then on the coasts of the U.S., that's where the most expensive power is. That has opened up, and then slowly it's kind of eaten into the
Right.
interior of the country, um,
And the rents
as
were
you hit price parity and on costs and things like that. So I think that same thing will happen here with CCS.
So when you think about the next phase, you have a phenomenal portfolio, let's say, of these projects with your original thesis, which is we really like the scale of these top tier offshore prospects. You've been fortunate to get a lot of ownership in some of these to sort of further develop them.
Mm-hmm.
What's the next phase here? Is it to try to find the next tier, or is it some adjacent opportunities to what you're doing there? How do you think about the world?
Yeah, we spent a lot of time thinking about this, and I don't have like a certain a slam dunk. I know it's going to be this is the answer. I think that we've kind of picked a few themes that we're working on in a few different areas, and they will probably be smaller projects, and you'll have to. I mean, you know, two of the three offshore projects that we've been involved in so far are 20 million ton per year projects.
Yeah, they're
The
massive.
scale of that is astronomical. If this is an interesting one, Raj, if you look at all the utility scale solar in the entire state of California, okay, it's taken 3 decades to build it out. Everybody thinks California is so progressive on
Sure.
renewables and this and that, right? If you look at the all of the utility scale solar and you run a comparison that okay, solar is an avoidance of
Right.
a hydrocarbon created electron. That avoidance in carbon is 20 million tons a year.
Wow.
So our one project in Corpus Christi right now is the same carbon avoidance impact in one project that it has taken 3 decades and I don't know how many billions of dollars and how many people and what have you to build out for carbon avoidance in the state of California. So these are really big, mega
Scale.
projects.
Yeah. From a storage
Yeah,
perspective, you've locked up. They're not small, right? Like you found like you just take the basket of all these storage projects. Even you guys have just been involved in. It's
yeah,
insane, right?
yeah, right. And so we've been in two of those. And then we've also got our Louisiana project, which is like 8 or 9 million tons a year of
Sure.
storage, right? So almost half, and could size up easily to be half, could size up to be 10 million tons a year.
So they start
We'll
looking
see.
at sort of how can you integrate other parts of the value chain here, right? One of those, I don't know if we want to get into anything on the Carbon Plex front, but that's an interesting adjacency as well, right?
Yeah, so we're seeing an interesting need with so you said it right earlier, right? Emitters are customers. You have existing customers that tend to cluster together and be in proximity where is a good place to build one refinery, typically you'll
Sure.
find several. Whereas a good place to build one chemical plant, you'll typically find several. Whereas a good place to build an LNG facility, typically you'll find more than one, right? And so there's some interesting things that can be done with customers. One, in helping them with their capture, financing, owning, tax credits, things along those lines, but also in trying to optimize how you connect those facilities
Hmm.
and then go to storage, right? Because the storage is there. We've got the storage, whether Carbonvert has it, somebody else has it. We can do something good in clustering them together, and then one of the other interesting things that we found out was we were getting a lot of phone calls from greenfield project developers that were saying, "Hey, we're trying to site our project. We want to
Hmm.
bring it to near you guys, but they'd have 50,000 tons a year of CO2 or maybe 200 or whatever. They're never going to be able
They're
to afford
smaller.
their own well." And so there's an opportunity that we're working on called Carbon Plex, where we basically co-locate greenfield projects that are on a carbon theme, decarbonized, sustainable aviation fuel. It's
Hmm.
blue hydrogen. It's this. It's that. Whatever the products might be. It's a recycling business. It's something along those lines. So creating a plug and play. Think about it like an industrial park where somebody can come build their carbon related project, and you've got a carbon services layer kind of built
Yep.
in with shared compression, shared dehydration, shared interconnect. And so we're spending time on this concept that we call Carbon Plex to try to figure out um, how and where and when and we're looking for the right partners to potentially help us. We think it's a very replicatable model, and so
Hmm.
you know who does what, how did the economics work? So some business development on that front.
When I first was introduced to the concept, I liked it a lot because to me, it's almost like, okay, let's make the carbon disposal part of our business a utility, just like all
Mhm.
the other things that we like. We need to consume power. We need to have waste management. We need to have all these sorts of things. Can we
That's
get to
right.
the point where this non-core part of our business is viewed much more like a utility, and you're the services provider to that utility, and sort of make it plug and play because like ultimately their core business is very different than what we're
Yeah, it's
talking
hard
about.
enough to build your $1 billion sustainable aviation fuel plant
Right.
and make that thing run and worry about your feedstocks and worry about your offtake and get those contracts and then just operational excellence, right? Like the doing all the other stuff that you have to do to make that sustainable or low carbon or blue
Hmm.
is complicated, right?
That's right. And this is, forget about the cost for a moment. It's like a mental bandwidth issue, right? Like it goes back to the team of engineers saying, we could do this, we have the money. Yeah, okay. But is this the best use of your time and resources?
Right,
Uh,
right.
Probably not, right? And it would, like in the same way that like I don't have a water well at my house. I'm not, like I haven't fully integrated all the electricity to provide here. But maybe Resi
Yeah,
Solar becomes a thing at some point here.
yeah,
Probably not.
yeah,
Uh,
yeah.
but um, yeah, like it would be much
What?
nicer to think of this
Or
as a
set your house up to be completely off grid. Like what?
yeah, like
Like,
yeah,
yeah, I get that you could, but you'd spend a whole lot of your time and money and days and
correct.
right,
And I got a handful of
in
friends who would love to do that. They're
yeah,
doomsday prepping, as we speak. But I'm certainly not.
yeah.
I've got some other stuff I'd like. If this is the end, I won't. I don't want to spend all my time thinking about the end. I'll tell you that. You
That's
know.
right.
So that's awesome. So we've got Carbon Plex is a new opportunity potentially based
Mhm.
on sort of early customer demand. What do you think are, call it, the number one misconception you're hearing from potential customers or emitters that you wish, let's say on a long enough time horizon, everyone will understand?
Well, I don't even know if it's the customers or the emitter. Like the big challenge or number one concern that I have right now is just this. There is a dramatic disconnect within the environmental community
Hmm.
on what their their purpose is,
Hmm.
and I know this. I because I was a solar guy and happy to still tell you all the reasons why solar is a fantastic technology and we
Hmm.
should deploy as much of it as we possibly can. But that the folks that are just saying like it's just got to all be solar and wind and batteries, and
Right.
we got to shut down all of the everything that's conventional and hydrocarbon driven. uh, I struggle because these people don't really, they're not proposing a solution that's realistic
Right.
or possible. There's not enough mined copper. There's not enough of the critical minerals. There's not enough of the manufacturing to get that. Like you can't even get like substations and transformers. Those are on 2-year backlogs right now, just
Bottleneck
in
right now. Right.
general. Like the
Yeah.
grid doesn't work that way. Like it's just, to me, there's a real problem. And I'll take to task some of your listeners that are historic oil and gas folks. The real problem, in my opinion, is that for so long the industry denied, at least in the U.S., denied the environmental impact of CO2 and methane going into the atmosphere. Like, tried to find other science, like made bogus science, whatever. They've blown their credibility with these other groups that are like all. It was a fine thing for them to say back then because all they had to do is be like, oil and gas is the enemy, right?
Right.
The real enemy is carbon and
Yep.
methane, right? Like it's the emission that you're trying to not
Yep.
have go in the atmosphere,
Yep.
right? And so you want to go electric, great. Like you're going to have to mine a bunch of stuff and
Yep.
like literally bulldoze mountains to get to
Right.
that, and they're going to be gone. And so there's an environmental impact on both sides, right? Of this, and so, but the oil and gas industry like just really did itself such a disservice because they're not considered credible to the really far leaning environmentalists that are just that the only mantra that they've been taught or been able to wrap their head around, because it was nonsense to chase the goofy science that the oil and gas business was trying to prove and whatever. Like they didn't need to do the technical arguments. They just said, you
Right.
guys are nuts. This is
Right.
bullshit,
Yep.
right? And
Yep.
and so that's what we have to overcome, because America is confused and the environmentalists are confused and people are scared of CO2 pipelines, and they've got all kinds of garbage running. And then, it's
That's been the
okay.
biggest hindrance to the Midwest transportation project, right? Which is who had on the bingo card that, like if you talk to every investment professional who's looking at the project, they said, "Oh my God, it's going to be incredibly expensive. Oh,
Yep.
it's not going to generate returns. Oh, the permitting process. Like, do you know how long it takes to get a Class 6 permit? Oh, these wells are going to leak." Nope,
Yep.
that wasn't the issue. The
Yeah.
issue was people in their own communities that actually, in theory, benefited from 45Q trickling down to their
Yeah.
land in some form or fashion. They say, "Hey, I'm out on this. This isn't environmentally positive." When in reality, it certainly is, and would have funded a lot of their local communities, right? Unfortunately,
Well, and now they're just going to put it in a rail car or a truck, and they're going to move it that
it's even
way.
worse.
And guess what? Like
It's
now
even
the
worse.
school bus is going to get hit by a truck full of CO2 or something.
That's
Like
right. That's
it's
right.
just like, I, so I think that there's a knowledge gap issue. I think people don't, this is super complicated stuff,
Yeah.
and people have very short attention spans. The environmentalists are, some of them, not all of them, but like are confusing the story. There's other really practical folks. Like we have to stop these emissions from going into the
Right.
atmosphere.
Yeah. Yeah.
Like we just
Otherwise,
it's
they're just going up, right? Which is, like, and so you have to debate the alternative, which is like, oh, is carbon capture and avoidance, like, do we really care? We should be doing carbon removal. It's like, yeah, but the carbon removal, whether it happens or not, great. But again, to your point, let's say $1.5 billion facility that is first of its kind that may do 500,000 tons a year. I'm all for. Like, someone's got to spend the money, someone's got to do it. But to your point, we've got.
but you can't make the steel to make the
bingo.
device without like
Yeah.
hydrocarbons, right?
These are-
And so then to just say, well, we just got to stop all of this. And like we would go exactly one day, and more people would die. Like,
Yeah, it's not practical, right?
You can't go to the hospital. You can't, like, it's just it's stupid, right? It's
agree.
literally the naivest thing I've ever heard to just say we're just going to stop and that's the solution. And
That's right.
and until that day, like we're just like we're yeah. So I think that that's the big challenge right now. I think there's a lot of motivated people
Yeah.
that should come into this space, and the best way to make is build a workforce around it, and those people are going to know people, and those people are going to have a cousin and this and that that says oil and gas is bad, and they're going to say, yeah. and
No,
and
it's
so
not. Like, yeah,
people in the industry, um, and building an industry and having successful projects,
right.
um, will hopefully help. But it's not going to be easy. But when things are challenging, that's when opportunity arises, right? And
That's right.
there's, I've told people before that it's like, if I don't care what line of thing you're into, there's probably a carbon angle for it.
Yeah.
And if you're trying to think what to do next, I think just pick the theme carbon, decarbonization, carbon management, however you want to say it. There's carbon accounting. There's
It's a secular trend,
it's
right? It's a secular trend.
it's
And I think your point is well understood, which is we have, I think about it this way, which is like, let's say you have 10% of the population that sits on each side of an issue. So one may be like, we don't want oil and gas, like it's horrible. Like we don't want any of this carbon, like forget about carbon capture. We just need to be talking about renewables, whatever it is. And then the other side, which is, sort of wholly the opposite, equal amounts of people, call it 10% or something for, and they say the opposite, which is like, forget about all these renewable projects. Like they're not cost competitive. We're just going to keep doing what we do, whatever. And the truth lies somewhere in the middle. Like it's a multivariant sort of problem. But the two sort of binary outcomes are not only the loudest population, but they're also the easiest to get behind because it's
yeah,
a very team mentality, right? Like human beings are hardwired to be like, this is my team, this is your team. Pick which
yeah,
side of the fence you're on.
yeah,
Whereas there is now this popular narrative that's coming about, which is like this sort of all of the above energy becomes a topic of conversation. We got to see what that looks like. I don't know. Like in a year, there'll be a new phrase, right? Like,
yeah.
but overall, the answer lies somewhere in the middle. And I think your point is well suited, which is if everyone loved it, it probably wouldn't be a good economic opportunity because then everyone would want to be in the business, right? Like, so by
Yeah,
definition, there is some value to people
yeah.
being like, oh, I don't like the line of work you're in. That
Yeah.
generates some sort of economic rent that ultimately makes this business the most sustainable it could be. So,
That's interesting.
I
I like
applaud
that.
what you're doing. I think the market needs to grow as much as humanly possible. If you weren't playing CCS for a moment, because you are a serial entrepreneur, what do you see out there that's like, oh, that would be my next venture. That's where I'd love to spend some more time.
Well, so I mean, I think back to, I think I would still be on the carbon theme, right?
Okay.
But I'm not sure. I don't know if it matters. Everything we have to re-engineer. So whether CCS is carbon capture and storage, so that's
Yeah.
capture, transport, store. But there's all these businesses that need to support that, to monitor that. You have to have this MRV, monitoring, reporting, and verification. That's not only to qualify the tax credits, but then MRV also works for carbon offsets. So there's very technical, practical work to be done. We talked with one of the big four accounting firms. I guess this is maybe about a year ago. They told us that they were hiring 35,000 carbon accounting people.
Wow.
Like, now I don't know what the period of time was for that, and I don't know if they're done or
It
this or that.
depends
But
on the SEC, sort of
uh,
execution, things like that, I suspect.
yeah, I mean, there's and so great. You're an accountant, or you know what accounting is. Well, think about carbon accounting, right? There's this
Yep.
whole other thing, and so depends on, and there's the capital market side of it. There's a need for people to figure this out and smooth this out and bring capital and create products. Create risk products if you're in the insurance business. So all these things, I just see it as a massive growth sector. And if you're in banking, I don't like, how much does other banking grow? I don't know, right?
Yeah,
And how
that's
if
right.
you're in real estate development, lots more real estate development. I don't know, like maybe,
The CAGR on
and
carbon is great, right? Like you're sort of like hard to deny that we're not going to have a massive growth rate in this sector.
it's there's a whole bunch of stuff that hasn't been figured out, and that needs to be figured out, and that creates opportunity for entrepreneurs, and it creates opportunity for people that don't necessarily need to be like the entrepreneur that takes all the risk, but want to go get a job doing something that they wake up every day feeling good about what they're working on, and they get to experience challenging work, um, and so yeah, I would just pick the theme through and through. I'm sold out on the theme.
Yeah, I love it. Okay, well, good deal. Well, I find this hilarious. We started off before we started recording thinking we wouldn't be able to go for a half hour without it getting boring, and like
Um,
this is going to be the longest episode by far that I got so far. So I love
Holy
that.
cow, dude. I'm sorry,
What?
Raj.
No, I love it. I'm glad. I'm good. Did we can go another hour. What did we not cover anything that you think would be worthwhile going over?
I think we got it all, man. Do you want to know what I'm going to have for dinner tonight, too?
You making a steak? What's going on? Well, okay. Well, this has been awesome. If people want to find you, what's the best way to get in touch with you?
you know what? I'm an active LinkedIn user.
Yeah.
So, friend me up or whatever it's called, connect up, and you can message me through that system. And you can go to carbonvert.com, and we have contact information on there as well. So
This is awesome. I appreciate you coming on, and let's try to do it again. Maybe 6, 9 months out. I'm sure the world will look a little different then too.
we'll have new stories.
Yeah. Awesome. All right.
Thanks, Raj.
Take it easy.
Appreciate it.
Thanks.
See ya.
Bye.
Bye bye.